it's my opportunity to bring in our next guest analyst. That's going to be, he's batting cleanup today. Oliver Slope, Blue Line Futures in Chicago. Oliver, thanks for being on. Okay, well, I mean, there's lots to talk about. Anything jump out at you there with those prices?
Well, a little bit of weakness in today's trade, but ultimately I welcome that. I think it's healthy for the market, particularly in corn and wheat, where we've seen a nice rally, one of the biggest rallies that we've had in what seems like a lifetime, which took the RSI, or the Relative Strength Index, near their highest levels in over a year, which means we're basically in overbought territory. So the market seeing a little bit of a retracement today, and I think, again, that's healthy. How much further could we pull back from here? I don't know that we're going to roll over and fall out of bed. I think another 5 to 10 cents lower in corn would probably represent a buying opportunity, and we can continue to stair step a little bit higher through the end of the year as we try to carve out these harvest lows during this time of year. Wheat, I think, is going to be a little bit different of a story. There's a lot of weather concerns overseas, and Russia in particular with their crops. So some potential upside movement in wheat might be warranted further down the timeline. But right now, just some jockeying back and forth and position squaring after a nice little run higher.
So are you, are you bullish corn here? Let me rephrase that. Are you rewarding this rally with your producers?
Yes, I think the rally that we've had has presented some pretty good opportunities, and we've been looking at the futures and options market together. Volatility in the corn market's at its lowest level since the beginning of the year. So if you wanted to hedge something or take a speculative position in futures, you can hedge those futures with relatively cheap options, looking at December options or even the weekly options, looking at the new crop week 2 options. They expire next Friday. So if you want to take a position in futures, hedge that futures contract with an option that expires next Friday, which gets you through next Friday's WASDE report. So a lot of opportunities here in the coming weeks, I think, for this market.
Yeah, I mean, a lot of folks don't realize that when those options volatilities get low, it really makes insurance a lot cheaper. I mean, that's basically it, right? You can buy insurance for a lot cheaper than you normally could, correct?
Instead of using a stop and being worried about getting stopped out at the lows or highs, the options give you a little bit more staying power in the market, especially into the report next Friday.
With cheaper levels on top of it. I appreciate that. That's a great idea. All right, stay right there, though. We need to go away. We're going to pay some bills. We're going to talk about some livestock when we come back with Oliver Slope. He's with Blue Line Futures in Chicago. We'll be right back. 7635. All right, let's bring in our guest analyst, Mr. Oliver Slope. He's with Blue Line Futures in Chicago. Oliver, what jumps out of you there?
The cattle market was just on a tear, basically shot out of a cannon in yesterday's trade, live cattle and feeder cattle, making a full retracement of the breakdown from August. So if you look at a chart, it's like August really never happened. We're right back to where we were to begin with. So I think this is an opportunity, again, for hedgers to look at some downside protection in some of these contracts, especially with a lot of lingering headline risk. We've got an incoming election. We've got things going on in the over in the Middle East, and then we've got a port strike as well. And tomorrow morning, we've got to look at non-farm payrolls and unemployment. So a lot of balls in the air that could potentially impact the cattle complex and the consumer and the demand on that side. So back at these levels, if just last month you were wishing, man, I wish I would have got something done at those upper 180s, this is your chance to do it. I think part of the recent rally that we've seen has been on the back of October live cattle futures going into delivery next week. So you're seeing the cash and the board converge a little bit there. I don't know that the cash is going to be able to run away with those looming headline risks that I had mentioned. So again, I think this rally is an opportunity to layer in some protection.
10 seconds to you. How much do these looming geopolitical and our own problems here factor into what you're talking about with your customers?
We're constantly thinking about it, and we're just talking about, managed money as a whole. Who wants to be heavily invested in a market with all these headline risks looming?
Good point. Great point. Super stuff. Really appreciate you wrapping things up for us there, Oliver Slope from Blue Line Futures in Chicago. Bring it back here to